these technology names leading the way. And joining me now with more on the markets is Kenny Polcari, partner and chief market strategist at Slatestone Wealth. Kenny, great to see you this morning, joining us from Jupiter, Florida. And I got to say, I'm sure it's hot down there. These tech names look hot today. What do you think?
It's warm down here, but yes, tech does look hot, right on the back of what we saw yesterday, kind of continuing that momentum that we saw after the Taiwan semi. But yeah, I think it's going to be another good day for stocks.
What does this Taiwan-U.S. trade deal mean when it comes to building out the broader tech capacity from a production standpoint here in America?
Well, listen, I think bottom line, I think it's great, right? We're going to move production onshore. We're going to have it here. We're not going to be dependent, to get them from Taiwan. There's always that geopolitical kind of nervousness in there between China and Taiwan and what could happen. Could they disrupt that chain? If they're built here in the United States, they're built on, in this country. And so you eliminate a lot of that kind of anxiety and nervousness. And so therefore, I think it's a big plus. I think, once again, Trump has done an amazing job in terms of bringing manufacturing home back to this country on a number of levels, for workers, for manufacturers in this country, as well as for kind of security, right? National security.
Let's talk earnings season, because the big tech names, they'll be up next. But we heard from a lot of the big banks officially kicking off this reporting season this week. What are your takeaways from the results that we've received so far?
Listen, they've been great, right? I mean, every time you turn around, I don't think I've seen one miss in a company that grows avocados. Or beyond that, the banks have really reported well, and they were expected to be strong. They seem to be, coming in as expected. Their forward guidance, while cautious is not negative, I think it's okay to be cautious. Cautious is good, because then you always outperform. But I think you have to just be a little bit cautious when you're talking about what's ahead, right? We've got midterms this year. We got a lot of geopolitical stuff going on, and so it's okay to be cautious. But overall, I think so far the earnings have been great. I think what's interesting, and we heard it first from Jamie Dimon, which investors should just pay a little bit of attention to, is that JP Morgan increased their loan loss reserve account by a fairly substantial amount, which only means it's not about losses that have occurred. It's about potential future losses, right? So if he's a little bit nervous, what that suggests to me is that JP Morgan is allocating more money to that reserve account in the event that there start to be some loan defaults. Remember, there's a lot of people talking about, the economy slowing down and maybe there's going to be some hard times. I don't think that's going to be the case. I'm very much in the camp that the economy is strong and we're going to weather our way through this, and that's not going to be the case. But I think it's interesting that a bank like JP Morgan would have raised their allocation to that. It just sends a signal that they're being a little bit cautious, which again, I think is okay.
Yeah. It's interesting, because as we see the technology names lead the large cap index today, we're also seeing small caps actually outperform overall. The Russell 2000 index up about 0.9%, Kenny. And we've had guests on this show talk about this stock market rally overall broadening out. Are you seeing that from your end? And if so, do you expect it to continue?
100%. And small SMIDs, right? Small and mid caps are a sector of the market that we are really bullish on. We've just launched our newest small and mid cap fund. It's performing well. You see that they're outperforming so far. The small and mid caps are kind of in the lead so far this year. They're expected to continue to do well. I think it's a space that had underperformed for a while, and I think this year is going to be the year that they're going to start to lift its head. And we've already started to see that. So yes, we're excited about small and mid cap. Look, they can be a volatile sector for sure. But that's exactly the point. So it's very much a stock pickers market in that space. But yes, we're very excited about it. And I'd love to see, I love the action we've already seen so far this year. And I expect that's going to continue through the year.
Mm-hmm. The stock market is closed on Monday for the holiday, but come Tuesday, we'll pick up with all sorts of headlines, I'm sure, coming out of Davos, the World Economic Forum starting next week in Switzerland. What are you watching for at Davos?
So listen, I think Davos is great. I read it's a big boondoggle. I get it. But they get lots of interviews, government officials, CEOs of all these international companies that come on board and they do all these interviews. So we learn a lot about kind of what's going on in all different parts of the world and what those C-suites are talking about, their own economies, where they see their own businesses going. So that's always For me, that's always the exciting part. But in the end, do I think that, that what happens at Davos is going to change, the investing landscape, or is it going to, give me as a wealth advisor here a reason to change my strategy? I don't think so. It never has. But I always enjoy listening and learning from the interviews that I see a lot of the government officials as well as CEOs give at Davos.
Yeah, we'll be waiting to see what, if any, headlines do move markets next week. Kenny, great to see you here in this new year as we kick off 2026. That's Kenny Polcari, partner and chief market strategist at Slate Stone Wealth down there in Florida. All right, Kenny, thanks.
Thank you very much.